welcome to Common Sense Investing for a Tuesday evening public live stream because everybody's a day late because of the holiday on Monday. Basically, all the markets were closed. I hope everybody had a wonderful weekend and 3 days off and you didn't have to work for that amount of time. So looks like my video's working, my audio's working, and I am good to go. My name is Cameron. I'm here to talk about microcap stocks. That's what I do every week, is talk about microcap stocks because that's what I enjoy doing. That's what I love, and that's where I make my money. So tougher market today. And I'll talk about that in this live stream here, as well as usual. I have a presentation. My presentation is going to start here with this slide. A bad plan is better than no plan at all. Feel free to leave comments, say hi, anything else that you'd want to talk about today. And once I get through my presentation, I have a little Q&A period at the end, and we'll talk about any stocks that you want to get to, right? And this is such an important slide. I try to bring it up whenever I can in microcap stocks. It's important to have a plan. One of the worst things that I see all the time, you know, being on social media in microcap stocks, is people pitch me stocks all the time. And I always joke around that I try to act like my toddler. When my daughter was a young 3-year-old child, basically, and she was just learning how to talk, it used to frustrate me to death because she used to wander around the house and just everything was why, right? You answer why, and she just looks at you and goes, why? That is what I am like sometimes as a microcap investor, right? Having a plan, any plan, understanding why you are buying a stock, why you are holding a stock, why you are selling a stock, why are you doing whatever you're doing in the stock market. Understanding and making that plan is better than having no plan at all, because it's amazing how many people I speak to in stocks, just in general, not just microcaps, but in stocks, really, you know, panic buy, panic sell, not sure what they're doing. Make sure you build a plan. And if the plan is wrong, that's better than no plan, because you go back and you learn from it. What did I get wrong with my plan? What can I change? How can I make my next plan better? So please go have a plan. And I think that I'm bringing this up normally because when I talk about this kind of stuff, when the market is going up, nobody really listens. I've got a plan, Cameron, it's to make money kind of thing, right? It's like, yeah, well, that's a good plan. That's what we're all here to do. But it's got to be a little more intricate than that. When the markets are going down, when there's challenges in the market, you know, this is, in my opinion, the best time to be like, oh, you know, the boring part of investing, which is making those plans, right? So that's what I like talking about. This has been my plan for a while. I built this slide a while ago. You know, before I started using that other slide, I used to just have this boring, you know, rectangle here, build a strategy. It's okay to be wrong, and it is. You know, my plan was always to have this lazy, boring summer where I did not expect a bull market. I expected this lazy summer into most of September, where I felt that we were going to see a challenging Q2. We are going to see some stocks drop and present some buying opportunities. And I really did think that we were going, or I hope we're going to get our next bull market probably later in September, hopefully, and then through October into about mid-November. This is typically what I normally see. This is due to usually the fall investor conferences starting with Small Cap Discoveries, September 29th and 30th in Vancouver. And then there is Planet Microcap Showcase in Toronto in Canada, you know, October 21st, I believe, to the 23rd. We have the Q3 earnings season, you know, roughly in that timeline towards the, you know, end of October into November, where we start to see more earnings come out and we get an idea of what this is going to look like. And then my plan is always for having more cash available for tax season. This is when we tend to see, you know, people selling stocks for capital gains. So you see dips in some winning stocks sometimes, where a good stock that's been going up all year finally sees a dip as people take some gains. And we also see sometimes, you know, some of the beat up stocks get a little bit of a recovery because we'll get some capital losses and we'll see some, you know, stocks that I'd like to own, but maybe they're not quite cheap enough. They kind of go down a little bit. For me, though, I am pretty excited about 2026. 2025 is proving to be a little bit challenging. And of course, this plan that I built isn't built just on guesses, right? It's experience and looking at the history of the market. But this is one of those things where this slide is coming up now on social media more and more. People are seeing it. This is the S&P 500 monthly average return from 1980 until August of 2025. September is usually the slowest month, right? And August, of course. This is why I call it lazy summer. Late, August, early September, back to school. Everybody's busy. Everybody's on vacation. And I mean, not like here, June and July are really cracking better, right? But essentially, this is a slow period for stocks right here. This is normally when I like to do my research and buy some stocks. And of course, what did that lead to today? It's a short week. I'm sure Donald Trump can make some announcement of some fantastic trade deal with China and, the stock market would get better. But I mean, right now, of course, what do people see? That September is a slow month for investing. And then what do you see on the news? Just like, everything's red, right? Gold is up, volatility is up, stocks are down. This is immediately, September's a bad month. September's a bad month. And then sure enough, the market opens September 2nd and it's all in red. I have to say sometimes, I think it would be a fascinating conversation to have that would probably have no answers. I would probably have to go to like Ryan Telford to gather some data on this. But I do wonder sometimes, this old argument of the chicken or the egg, right? Is the market down because everybody knows that September is a bad month, so everybody kind of panics on the first sign of weakness, and we get a lot of trimming, taking some profits, right? Everybody's cashing up. Is really the market bad today because people know that September is usually bad? Or is it just the market is bad and the data just proves it out that, hey, September is usually bad in the market, right? Is it the chicken or is it the egg? It's sometimes I just never seem to know. Either way, I stick to what I do, which is basically this, right? Inputs right now, looking at the economy, looking at some of the macroeconomics, looking mostly at the Q2 earnings season. I mean, the inputs have definitely been negative over the Q2 earnings season. We have seen less revenue than expected. We've seen higher expenses than expected. Because of those two things coming together, we're seeing margins shrinking and we're seeing a lot of companies struggling. So these inputs aren't necessarily specific to individual companies, though you do need to look at that. But definitely if I just zoom out a little bit at 20,000 feet and look at all microcap stocks in Q2, I put a post out the other day. As far as companies that at least met or exceeded my expectations for the Q2 earnings season, I think 10%, maybe 10%. I think about 80 to 90% of stocks, fell below my expectations, fell below the street expectations, or something happened that was a little bit disappointing. So these inputs here are definitely coming in a little weak. I do love it when large investors kind of agree with my inputs. It validates my slides here. So like Ian Castle says that small stocks shouldn't be seen as a single bet or decision, but a series of bets and decisions. Small businesses evolve very quickly in good and bad ways. In 3, 6, 12 months, the business might deserve more of your capital or none of it. So that sounds a heck of a lot like my little slide here. And I like that. Now, speaking of Ian Castle, right? Another post from Ian today, talking again, every time the markets get a little weak. It's funny how sometimes it's in a bull market, sometimes I'll resonate with certain investors more than others. And then in a bear market, I'll resonate with other investors more than others. It's funny how that happens. And it's interesting to me how every time we get a little bit of a weak market, or a bear market, I do resonate quite a bit with Ian Castle, who's saying here that in bull markets, the only thing that matters is growth. And then in bear markets, the only thing that matters is the balance sheet. Couldn't agree more at this point. We've had some companies that have reported, I'll talk about them in a minute, but I mean, NTG Clarity Networks reported 51% top line growth. Share price has been crashing. TrueBar reported 176% top line growth. Share price has been crashing. Very much right now, I find in 2025, in the summer of 2025 anyway, balance sheet, people are worried about the balance sheet. Ian has, this is like the video of videos because Ian also has a new video. I will post a link to this down below in the pinned comment of this live stream once I'm done recording. Give me 5 minutes. And it's a fantastic conversation about overlooked rules, investing rules for bull markets. And it's definitely worth a listen. Now, interestingly enough, this guy also has a podcast. So a video highlighting other videos. Just today released a podcast done with Value Bridge, David Barbado here over at Value Bridge. And this is Wolf of Wall Street versus a real penny stock investing today, common sense investing. So this shadow is, yes, this is me. So a little bit strange because most of my thumbnails, people recognize my videos because I always have that smiling face on them, right? This is one common sense investing video that's just got a giant shadow. Fascinating conversation. Thank you, David, for having this conversation. I do love reaching these types of audiences because if you watch this video, typically when I do these live streams, I'm tailoring these live streams to a somewhat educated microcap investor. That's who I think is watching my videos. When I do an interview or a podcast on a place like Value Bridge, it's people that are new to microcap stocks. And it's fascinating, the questions, talking about worried about scams, the percentage of scams. How do you identify a scam? And it is fascinating when you get down into microcaps and you understand the market, and you're occasionally going to get a scam company and you're occasionally going to hit a losing stock, but it's those winning stocks that make up for those occasional losses, and it's that risk versus reward balance. And I feel like everybody down here in the microcap community has been here for a while, and we kind of understand that risk and reward balance that we have in our portfolio versus some of the discussions, of larger cap investors or index investors that still have that fear. And I think we should be speaking to these people more often and going on more of these types of podcasts where we could say, hey, like, I know there is still penny stock scams out there. I agree. Like, one of the things David asked right at the start of this video is, does the Wolf of Wall Street still exist? And I was like, yes, we still get penny stock scams. We still get penny stock promotions. This still exists. But I am happy that we have formed so many great communities out there in the microcap space that are proving that even though some of those scams still exist, there's these other fantastic groups of people, Small Cap Discoveries, Microcap Club, Keystone, Rivmont, right? All these fantastic groups, Wolf of Oakville, that are forming, making money in these microcap stocks where I think the average retail investor should be. So I will link to this video down below in the pinned comment. Again, give me 5 minutes after recording this video. And of course, if you want to talk about this more, head on down to commonsenseinvesting.ca. That is where you will find my Substack. That is where you will find my Patreon. And through either one of those paid services, I think it's around $9 a month, you can join my Discord, which is where we basically sit around and talk stocks all day and have a lot of fun doing it, right? I'm going to talk about some companies. I'm going to talk about some earnings. We've had some earnings since my last live stream last week. Obviously, not financial advice. I'm not your financial advisor. I don't know anything about you. I don't know your risk tolerance, your experience level, how much cash you're working with. So none of this is a solicitation to buy, hold, or sell a stock because I don't know you. This is just how I invest, and I like to communicate that. Oh, boy. This is typically, I talk about this all the time on my videos. This is a chart from Ryan Telford, the return drivers for 10x stocks. And I've added a few steps here talking about, we need companies with sales growth. What happens when that growth stops? How long is that growth going to continue? We need companies that are getting sales growth and improving their profit margin, getting increased expansion of margin. This is one of the harder steps of microcap investing, because this means you need to learn how to read earnings and learn how to determine whether these companies are producing high quality revenue with growing margins or not. And then if you can get those two things, usually you get this multiple expansion. You get this discovery where other investors find the stock, and then it kind of becomes like, well, what's a cheap valuation, what's a fair valuation, what's a high valuation, and what's a pie in the sky, this thing has gone up way too much, I'm going to trim type valuation, right? So this is what we're looking for in our microcap stocks. How many companies in Q2 got this? Any of this, right? We had, like I was saying, we had some companies that got some growth, but they did not have expanding margins. If anything, the margins were dropping. We had some companies that did manage to squeak out a little bit more margin growth, but they usually had poor to little or no sales growth, right? We had almost no companies that got any kind of discovery or multiple expansion recently. Even a winning stock like Zoomed, I would argue, has gone up, but it's multiple. It hasn't expanded in multiples, right? It's still around 10 times PDE, and institutional investors are still not buying in. So Q2 has been a really tough one. I think the closest we've come to getting all three or any resemblance of these three. D-Box Technologies, the haptic motion seat company, has done very well. Zoom Technologies, obviously, got sales growth, profit margin growth. Share price has gone up, but I don't think it's got multiple expansion yet. And then finally, the cannabis stocks. Cannabis is doing very well. Some of them are getting multiple expansion, even though they aren't getting, some of these other things. But there's a lot of attention, again, right now on cannabis stocks, and those are going up. So unfortunately, that's what we're looking at. I had somebody here already, nice DRX news. Yes, I would agree, right? So getting to some specific companies, DRX signs a deal to buy Quebec-based group LAR for $19 million. This is all the details we have. This is literally the whole press release right here. Wasn't like a copy and paste job and I put it together from a much larger press release. This is it. So, $19 million established in 1942, a couple of the things that they do, including overhead crane solutions. They'll pay $15 million in cash and then this many shares. And, the CEO says it's going to create significant synergies, and that's it. There's speculation now out there from investors whether this is all the information we're going to get until earnings comes out and we see what the numbers are. There's some speculation that the reason they bought this company is to basically get their Rolodex of, contracts and people they can call to increase their backlog and get people excited about ADF Group again, especially if some of that backlog is Canadian revenue. All in all, for a company that's been massively beaten up in the past, how long is it now since share price has been going down? 12 months. It's been beaten up a while. And not only was it beaten up, ADF Group was lying on the ground, and then Trump came over and kicked it with 50% steel tariffs. And so it's been beaten up and then kicked down again. Fantastic news to see them fighting back, not just in share buybacks, which everybody expects them to do at their current share price, but finding another way to deploy capital. I can't say if this is a good acquisition or not yet. We don't have enough information, right? This is all we know, but I am happy that they're deploying some of their cash to try to keep some, they're doing something, right? They're doing something. And considering, through most of this, and it went back further, their share price started up around $20.50 up here. Considering that ADF Group through a lot of this decline did very little, Recently they're doing share buybacks. Recently they've been making more clear communication with investors, talking about how they're handling the tariff situation. What that is seen as at least some return, some hope for shareholders, where we've been seeing this really nice bench up consolidation as some people trim or sell or get out if they want to. Bench up again, consolidation, bench up again, consolidation. And now we have more good news. So did get a little spike today. I'm a little surprised it didn't go higher. But I mean, if this is definitely the tale of two companies, right? Absolutely amazing that we've gone from this. If you just look at this looks like a fantastic stock, right? That's a fantastic chart. So too early to say congratulations, but at least ADF Group, drx.to, is doing something about the problems and trying to help their shareholders. This is another one. NTG Clarity Networks reported earnings since my last live stream. That was August 31st. Revenue beats expectations according to Simply Wall Street here, and the EPS lags, right? So revenue up 51%. Net income is down. So I was just showing you that chart. People like growing revenue and then margin expansion. This is growing revenue. This is not margin expansion. Profit margin down. EPS is down. Everything on the bottom line is down for NTG Clarity Networks. Now, you have to understand the cyclicality. Cyclicality, is that a word? I don't think it is. How this company goes through different cycles of expenses and growth, right? It's amazing to me that we've had a lot of new microcap investors since COVID, and man, so many of you investors have learned so quickly. It's amazing. I still feel like one of the things that still needs some work sometimes with investors is understanding that cycle of spending for growth. Every time a company spends for growth, you do get that margin compression. You get higher expenses and less growth. And yes, look, I'll be honest here. Every time that happens, I don't care if it's a company I've been covering for a long time, if it's a company I've been covering for a short time. Every time we get this spending for growth, there's more risk. It does. There is more risk. There is always the chance that the spend for growth fails this time. Even if they've done it 10 times in the past successfully, situations change, geopolitics change, governments change, right? It's always risky. So I'm not saying it's a guarantee. But there are a lot of times when, if you can do your research, if you find the perfect stock that's on this low cycle where they are spending for growth, typically share price is suppressed. Then if you do get it right and the company does in the future, all of a sudden you get that growth and you get that margin expansion again, you definitely look brilliant. Now, in saying that, I was going to say that with NTG Clarity Networks, I was trying to temper expectations here going into the Q2, because this is typically their low cycle quarter. There's the Eid holiday, they have cash collection issues, they have been spending for growth. Q2 is expected to be a little weak, right? So this was kind of expected. $18.8 million of revenue, but yeah, their net income was way down because of their spending, right? Whew, that's nasty though. And this is unfortunate. We had some fantastic conversations in the Discord about, technical analysis, TA, right? Technical analysis is a brilliant tool to use. I think everybody should learn the basics of technical analysis. It'll help you when you find a company you like, when you find a company that you want to buy, TA will help you pick the right price to buy it at. It doesn't pick the stock. It doesn't pick the company. That's doing the research on the fundamentals. But it definitely does not hurt to time your buying using technical analysis. But in saying that, the technical analysis is supported and long-term follows the fundamental earnings of a company. So unfortunately, this was such a beautiful setup for NTG Clarity Networks, right? We had this bull market, we had this consolidation down, we had this share price up again, right? We had this consolidation down, and it was just a perfect setup here right on earnings, that if they had good earnings, we were probably going to get that up again, right? Just using this pattern. Unfortunately, again, because it's due to financial fundamentals, broke through every TA line, and right under their 200-day line right here. So share price has absolutely been crashing. I do wonder at this point if it's a little bit oversold being down this far, right? I was wondering if it would bounce on this 200-day line here. It did not. It's down to, I think, $1.74 Canadian today for NTG Clarity Networks. And you can see that massive volume of selling. It is now down 41% from their 52-week highs and 21% from when they did the financing, where a lot of people bought shares and warrants at $2.20 Canadian. So this was a fantastic technical analysis setup. Lost because of earnings. It was expected that Q2 earnings would be weak. Now, one of the problems from this, of course, is that the law of numbers, basically a 40% loss. They're down 41% from their 52-week highs. For people that bought at those 52-week highs at, I think it was $2.95 or around that price Canadian, you now need to see a 67% gain to break even at that 52-week high. So this is the importance of a stop loss. I hate to bring it up, but if you can stop out of a company at 10% loss, you only need an 11% gain to break even. If you could stop loss out at a 20% loss, you only need 25% gain to break even at that previous price. But if you have been holding this 41% loss, you're now looking at, needing probably a closer to 70% gain to kind of break even here. Here is the reasons why it tends to cycle low. This is the history of NTG's. This one is operating expenses, right? So here's their Q2 operating expenses from 2024. Here's their Q2 operating expenses from 2023. In 2023, they did manage to spread out their expenses throughout basically the entire year. Not saying that's what investors liked. Basically, every quarter expenses were going up. In 2024, they did a large investment here in Q2, and then you could see this trend down and then slowly getting back up. We're hoping for that trend to happen again this year, where Q2 was just a bit of an anomaly, where they're spending more for the growth for the rest of the year. That's what NTG has said on their earnings call. So we're hoping that they hold to that commitment and that we see this trend from 2024 occurring again here in 2025, where starting in Q3, we get to see a little bit more of a normalization of their expenses. So that's NTG Clarity Networks. Pretty disappointing it's down here at this price, but it is what it is, right? Cannabis. Fascinating. Cannabis has been taking off like a rocket ship. Go look at cannabis companies. Don't miss out, right? There's so many that are up 100% at this point. One of my next videos, probably for release on September 11th, is a cannabis stock, a new one that I am introducing to this channel. So I'll be in a few different cannabis companies, and I've already partially built a bit of a cannabis index that I'm working on in the Discord, where I'm going through different cannabis stocks, figuring out my top. I want a top 7. I don't want to buy 1 or 2. I want a top 7. And I expect those top 7 to hold about maybe 10 to 12% of my microcap portfolio. So it's going to be a nice little bit of diversity, a little bit more diversity than I usually have. And it is going to be cannabis stocks. I just see more tailwinds in this industry that I've seen in a long time. Companies are becoming profitable. Companies are becoming more important than profitable. Companies are becoming cash positive, producing cash for the first time in a long time. And this is exciting. Maybe some regulatory changes that help cannabis, but I'm pretty excited about cannabis moving forward. Excited enough to start building a little cannabis index for the first time ever, right? So let's give that a shot. Name silo. Somebody asked about name silo. Is there a good entry point on name silo? Maybe after contact with SMA 20. Well, again, that's a good. I just said how technical analysis can help you in targeting buy zones for a stock that you're interested in. And I won't tell you an entry point that I think is good for name silo, because I don't do that on this channel. But I like the way that you're thinking, that you're not just looking at this company looking at a fear of missing out, buying at any price, that you actually should be going for any company. Again, why? Do the research, figure out what you think Name Silo is worth on a fundamental basis with their financials, head to the technical analysis, make sure that you're buying it on the right time, and that's typically what I recommend. And this is Name Silo, right? So fascinating sometimes how I get asked questions, and I've already got a slide prepared. They just press release September 2nd here, their Q2 2025 earnings. Great job, mostly from me on their communication. Fantastic communication from a company like this, so small, right? Now, I must say it's easier to communicate with shareholders like this in such a well-structured way when you have such good quarters, and you can talk about consecutive quarters of net operating income, consecutive quarters of consecutive revenue growth. But remember, I'm the channel, I'm the guy that's constantly on here. And even in that interview that I just showed you with Value Bridge with David Barbado, talking about, he's asking me what financial metric is the most important to me when I'm looking at a microcap stock. And I say, I don't have a most important financial metric. I want to see trending up, right? I want to see margins trending up, sales trending up, everything trending in a good direction to show me that I have a good company that's trending to be a better company. That's what I'm looking for, is trends. So when a company communicates these trends by using words like consecutive quarters of this or that, absolutely love it. Of course, operating income is up, net income is up, adjusted EBITDA is up. They talk about total bookings and total deferred revenue. So everything I would want a company to communicate in a press release, Name Silo did. So fantastic work there. And again, talking about entry price, one of the interesting things, and I've been saying this all along, because I just made my video here on Name Silo, and that was right here. I actually timed this little dip pretty perfectly. But even in that video, like I said, it's not like I really mattered. It's amazing the consistency in that basically anybody who bought Name Silo at any point, this is a one-year chart, so anybody who bought Name Silo at any point in the past year has made money. So congratulations to shareholders. And one of the things that I'm noticing is, like you, asking about Name Silo and doing your research, I'm noticing now that it's just getting noticed by investors outside of the small cap discoveries the space. So good work. Slow and steady growth from Name Silo, but I mean, you talk about the benefits of microcap stocks. This is life-changing money. It's now gone from like 30 cents to $1.50. So fantastic work. Congratulations to Name Silo. Now I got some random companies to talk about before I finish up this discussion. Atlas Engineered Products released earnings. I feel so bad for Atlas Engineered Products. Nothing they can do, right? Doesn't matter how good the company is. Housing markets are just not there. They're trying, they're battling, the housing markets are down. They still got a 2% increase on revenue compared to last year. That's fantastic that they're not down 20%. So, glass half full or glass half empty, right? At least they didn't lose revenue, but they did have some increased net losses here in the quarter. Share price has reflected that, and it's a tough market to be in when you're building, roof trusses and walls and stuff for residential home construction. So Atlas is being kicked down right now, and that's, not their fault, but understandable, right? Hypercharge Networks, this is a tiny little high-risk company that I've been talking about for the last little while. I was talking about them there, and I introduced them there. Most people called me crazy, didn't like the company, didn't like the stock. It did pop up to about 13.5 cents Canadian on their really good earnings and some of their good press releases with more contracts recently. One of the problems, though, is this company did complete a financing here, which included 29 million shares and 29 million warrants at 12 cents. The warrants are right here at this line at 12 cents. So what you're going to see is that every time the stock bounces up, it's going to bounce down. That's the company's fault. That's their own fault for doing this financing. Here's the thing, though. Everybody's scared about the dilution. Everybody's scared about the cash. at the end of the day, the company is improving. You look at this growth, right? 59% growth in chargers. They actually sell electric vehicle chargers. They don't manufacture the chargers. They're just a middleman between the guys that manufacture the chargers and the end users of the chargers. They sell the chargers and they have the charging software, right? So 59% growth in charging ports, 279% growth in revenue, gross profit up 257%, and their net and comprehensive loss, so they are still losing, down 75% year over year. So people are worried about another financing. I would like to say if they could somehow find a way to get their share price, again, this is the whole chicken and the egg situation. If Hypercharge could get their share price to like 15 cents, these warrants would execute and they would not need another financing. If the company needs another financing, it's because investors do not value them because of these warrants, and share price sits here at 8-9 cents for the next 12 months, and then eventually they're going to need another financing. So at the end of the day, Hypercharge is doing a good job in losing less money, but I mean, it's the warrants are an issue for some people. Company is improving though, right? I like that. Gatekeeper Systems finally today just released this 27 million. I thought it was 23 million. Here the press release says 27 million FRA transit video project with New York Metropolitan Transportation Authority's Long Island Railroad. So investors have known this for a while. That's why this, right? And it benched up. It was holding about $1.35 Canadian. And then I think it was this CEO interview from Small Cap Discoveries with their CEO, Mr. Doug Diamond, who was talking about how Gatekeeper Systems is bidding on contracts, huge contracts, 70 million, 100 million plus type contracts. And because of that news or because of that discussion, you know, Gatekeeper Systems, $1.90 Canadian. I started coverage on them at 20 cents Canadian. So fantastic share price. I have to say, you know, people are definitely looking into the future. Gatekeeper Systems did release their Q2 earnings not too long ago. Revenue was up 16%. They did still have a net loss and, you know, 0.3 of a penny net loss per share in the quarter. So it is definitely these contracts right here or this contract right here, and then the potential of more contracts that are getting people excited about Gatekeeper. I've always been excited about Gatekeeper. I love this company, keeping kids safe on school buses. They do video surveillance and smart technology on school buses and other public transit. So I love the company. Doug Diamond, awesome guy. Share price is up. Everybody happy. Now a $200 million market cap company. That's absolutely fantastic for Gatekeeper Systems. I only do one pre-revenue stock per year. Now I know why. Like, I don't know how pre-revenue investors do it. The anxiety of not having any information. Like when I invest in a company that is making revenue and has earnings, I can at least go every 3 months and I get financial statements. I get a management discussion and analysis. Usually I get some kind of press release. Sometimes I get an earnings call. So every 3 months when I'm invested in a company that actually has revenue and actually has earnings, I have inputs. I have inputs to make decisions. And I could take those inputs and I could say, buy more, hold, trim, sell, whatever I'm going to do. I have options. This is the only pre-revenue stock I have on my channel, and it's stressful. I mean, the press release is for another patent, which I don't care about. That doesn't change my investing thesis at all, right? We've got a company that's got increased dilution because they're burning cash, and we are waiting for their facility in Calgary to finally start up. So they finally have this investor conference call. They released earnings. The earnings said nothing, right? More share dilution. We've got another patent. No information that can help me make an investing decision. Really, all we're talking about here is the company's hosting an investor webcast to deliver financial results and provide a detailed operational update inclusive of a timeline to bring the inaugural Calgary facility up to production thresholds. This is on September 10th. I hate that a company can dictate this timeline into the future. And, I hate waiting with no information. So this type of anxiety is why I don't like pre-revenue stocks. And the only reason that I like North Star Clean Technologies as a pre-revenue stock was because this Calgary facility was supposed to be done this year, this summer, this fall at the latest. So get it done, guys, or I'm out. All right, I'm fed up. This September 10th call better have good information or I'm done. Sick of these pre-revenue stocks. I hate this slide. I hate it. How many times does this slide get brought up as a joke and everybody laughs, right? The stocks you sold go up, the stocks you're about to buy go up, and then your stocks go down. However, in this case, I would suggest it's probably accurate. This is TrueBar. And for forever, this guy right here has been making fun of TrueBar. I hate it. I call their TrueBars arsenic-filled cancer sticks because of all the ingredients in them. When I go to Costco, I always ask the question, why wouldn't I buy a Larabar here? It's got 3 ingredients, dates, peanuts, and salt, versus the TrueBar having all these different, ingredients. I don't like it. For some odd reason, recently in earnings, I don't like TrueBar, and I keep finding myself in a position where I'm almost defending TrueBar because, the discussion about this company wasn't nearly as bad as what the reality was in the earnings, right? Now, this guy bought shares. I only own a few shares, a very small percentage of my microcap portfolio in TrueBar here. I thought this little dip was an interesting time to buy. That worked out pretty well for me right up until earnings. Earnings dropped, and look at this. TrueBar cannot stop crashing down, 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 down. Look at this volume. That is just nastiness. So, TrueBar. This is probably the only time I've ever looked at that and actually did think it was funny. So, with TrueBar, talks about, again, this whole spending for growth, and people in 2025 do not like spending for growth. When you spend way too much for growth, people are massively punishing that, right? And rightfully so. There's this balance between spending for growth, how much people will be able to tolerate of that, and then there's just getting way out of control. One of the things to notice, Clarus Securities here is one of the more bullish cases for TrueBar. They keep putting out these reports, putting out like target buys of $2.25. Right now, share price closed at what, 63 cents Canadian or something like that? Clarus is saying they got a target price of $2.25. They did reduce their guidance for 2025. It used to be $68 million. They've got it down to $65 million. But you see the flip side of the argument here with Stocks and Stones, the brilliant investor Matthew Martin here at the Rivmont Fund, talking about, this recent Q2 and basically saying what I think most investors were thinking is shockingly, their gross margin percentage declined to 22%, down from 45%. That is brutal. And then the other thing that's brutal, so many of these companies fail so bad at talking to investors. That earnings call provided no information, no clarity, no real hope or numbers to really, get to hold the shares. Just convince investors to hold the shares. They're not holding the shares. Everybody's selling. It's dropped from $1 Canadian at earnings, I think it was 99 cents, down to, I think, 62, 63 cents since this earnings, because this earnings call was so bad. So, pretty brutal. Yeah, right here. And it's amazing that year to date, it's the same price basically as it was 12 months ago. And 12 months ago, this was a $43 million market cap company. Now it's probably going to be a $65 million market cap company. But because of those higher expenses and that terrible earnings call, it's closing in. It's closer to these 52-week lows than the 52-week highs. This is the USD price right here, right? So terrible for TrueBar. What do you think? Did I miss anything? Is there anything else you want to talk about? I am done talking. It is time for some questions and answers. But I mean, what's next? What's next for Q2? What's next for Q3? What's next for Q4? At least in my mind, let me know what's on your mind. But I mean, at this point, I think 2025 is going to be a fairly disappointing year for most companies. I mean, a lot of companies had a weak Q1 because of Trump and the elections and the tariffs. So Q1 was down. You know, Q2 is supposed to be that just a little bit of improvement kind of quarter. I didn't see that in a lot of companies. I saw less revenue than expected. I saw higher expenses than I expected. I saw excuses and I saw problems. I mean, we're now 6 months into the year for most companies, and we're not seeing a lot of improvement. So even if some of these companies are supposed to improve or return to normal, starting a little bit in Q3 and then maybe Q4 is better, I would suggest 2025 is still going to be a challenging year. I really have my eyes set now on finding the best stocks for 2026. That's where my focus is right now, because we're 6 months into this year, and maybe I'm throwing the baby out with the bathwater here a little bit, but you know, I'm pretty much looking at Q1 earnings and Q2 earnings for most of these companies, and I'm not finding a lot that I love, not for 2025. I don't see like any immediate high potential winners, except maybe Zoomed, which never seems to have a bad earnings, right? But overall, I'm definitely that's what I'm learning from Q2, is I'm more excited about 2026 right now than I am for 2025. Scott Bell, Cameron, hope you had a great summer. Anything we as a community can do to support you when you're getting heckled by paid promoters? No, thank you, Scott. I appreciate the offer, but I am good. It's interesting because, you know, even on the podcast with Value Bridge, you know, big part of my channel used to be exposing scam stocks. I used to do a lot more of that. It used to be 50% of my content, right? And there have been a few videos that I've made over the past couple years on my new channel where I try to point out, you know, how to invest by pointing out some of the less preferred stocks, in my opinion. And every once in a while, anytime one of those less preferred stocks goes up in share price, I get people coming out of the woodwork basically heckling me. But I don't really care. I don't really care. I actually love it because, you know, it's as long as it's professional, right? Like I used to get doxxed. I used to get, you know, threats and legal threats and all that. I used to hate that kind of stuff. But as long as it's a little bit of professional heckling, I don't care. It's good marketing because, you know, it's interesting how in defending myself, I can prove that my system works. Like these profitable growing microcap stocks, it works. It really does. Yes, you're going to get the occasional loser, but if you have 3 to 4 winners for every loser, you're going to do very, very well in microcap stocks. So I'm okay. I'm definitely okay, but I appreciate it, Scott. It's crazy how much of a drop NTG is going through. I'm DCAing on it based on strong fundamentals, definitely a long-term hold. Well, that's just, it's interesting because we talk about cycles of the market, the major markets, right? If the S&P, if we have a terrible year in the S&P 500, microcap stocks are probably going down. That's just the way it works. So we have to watch the macroeconomics. And then we have companies that industry sectors that go through different cycles. You look at cannabis, right? Sometimes all of cannabis is up, sometimes all of cannabis is down. So we have the industry cycles. And then we have the cycles within a company. You know, there are times when you spend for growth and everybody's upset at you because you're spending for growth and your margins are down, and then you get that growth and your margins are up and everybody's happy, so that you get those types of cycles. The other cycle I notice is investor cycles, right? These retail investors go through different phases of learning and phases of building up experience in investing. And it's always amazing to me is this year in 2025 definitely seems to be that year where everybody's looking, like Ian Castle said, balance sheet margins have suddenly become important to everybody. It's like the new thing that everybody's looking at. So, you know, a company like NTG Clarity Networks, we're talking about a company that's going to be reporting probably $78 million of revenue this year. That's their guidance. And they've just got 51% revenue growth after having a year of 100% revenue growth. And I mean, I think we can reasonably look at next year and say it's not going to be 100% growth or 50% growth. But I mean, do we reasonably think that NTG Clarity Networks can get another 25% growth or more next year? Probably. Are their margins down because they're spending to get that growth? They're marketing, they're hiring, they're opening new offices. Yes, their margins are down. But that is scaring away so many investors in 2025. I feel like everybody's on the edge of their seats. Everybody's waiting. Everybody's waiting for that bear market. Everybody's waiting for that recession. Everybody's waiting for that crash. You go on social media, even the big market newsmakers are all waiting. There's more bears out there than there are bulls. Everybody's waiting for that market crash. And so I find like in 2025, the second a company reports any weakness of any kind, they're getting chewed up, spit out. Any weakness whatsoever. You know, revenue growth doesn't match expectations, you're out the door. Margins are compressed. Oh, that's terrible. I'm selling you, right? Everybody's looking for the perfect stock. Almost doesn't exist. We had two of those this year. That was D-Box and Zoom. Those were the only two microcaps that I looked at that were absolutely perfect, right? That's it. And you have the option to just go invest in those two stocks, right? That is an option if you want to do that, because those have been the only two that I've seen as absolutely perfect. Even some of the cannabis stocks that I think have had really good earnings this year, they're still dealing with debt and share dilution that they've accumulated over the past 5 years. So even the improvement in cannabis stocks isn't perfect. So when you look at a company like NTG Clarity Network, $78 million of revenue, high growth. Yes, they're spending to get that high growth, but the fact that share price, people are willing to sell this thing down to one-time sales because of, you know, reduced margins in one quarter is concerning to me. Absolutely. Any tips for preparing for upcoming conferences, Small Cap Discoveries in Vancouver and Microcap Club in Toronto? I will be at both and looking to take full advantage. Love the work you did leading up to MCC Vegas. Yes, I mean, go on my Substack. It's a free article. It's the article's called Convincing Investors to Become Shareholders. And what I talk about in that article is that when you go to these conferences, what investors are looking for is different than what they're looking for every day on the stock market. Because when we're sitting here in front of our computers, we're looking at numbers and we're looking at data and we're looking at trends and we're pulling out portfolio 1, 2, 3 and we're pulling out technical analysis and it's all data, right? When we go to an investing conference live, either Small Cap Discoveries in Vancouver at the end of September or Planet Microcap Showcase in October, when we go to a conference live, we are looking for the qualitative. We're looking for how confident the management teams sound. How good is their pitch? How convincing are they? Right? Are there other investors that like this company? If you walk into a presentation from a company and Paul Andriola and Ian Castle and Matthew Martin from Ribmont are sitting in that presentation, you don't think you're buying shares of that company, right? So you get that social proof from other investors. So what we're looking for in these conferences, at least it's not a great long-term strategy, but at least in the short term, I'm looking, this is the one chance we have to switch our brain off from the quantitative analysis that we do here every day and put it onto the more qualitative analysis. Management competence, social proof, what other investors are interested in these companies. Do they get a lot of questions? Are people curious? Do people want to know more about this company? I try to explain that in the article, Convincing Investors to Become Shareholders. I wish I could educate more companies on how to speak properly to investors, because sometimes I feel like they just accidentally fail at presentations because they're not very good public speakers. But yeah, that's my main tip. Try to shut off the quantitative side of the brain, focus on the qualitative. Probably don't make any FOMO type buys, right? But that qualitative decision making can help support and add to our quantitative decision making. And for me, that's kind of the point of these conferences. I have NCI, but for me, down hard, but I guess it's a good stock. I hope. We all hope. We definitely hope. I mean, there's risk for every stock. NTG Clarity Networks has been climbing a wall of worry for a long time because their revenue is in the Kingdom of Saudi Arabia and they operate in Egypt. And we do have biases to A lot of people love to invest where they live, right? You're more likely to invest in that local company that's down the road from you, or you can go look at their building and see workers go in and out of the building, maybe go have a coffee with the CEO. We're more likely to invest in those companies than a company that's halfway around the world because we don't understand it, and we're scared of what we don't understand. So there's always that fear of, oh, they're hiding cash, they're hiding earnings, they're doing this wrong or that wrong, or something pops off in the Middle East and this thing is going to go crashing down. Those risks always exist. Hopefully that's mostly bias and in people's heads, and that risk isn't too high. I think they're good company. I've been hounding on here for several streams how Atlas Engineered would deliver no organic growth, dilution, and incompetent management. Did you see earnings on Friday? It delivered all three. Uninvestable. Well, I don't know how much you could blame that on Atlas. They are expanding. They just had that acquisition of a new company. The market's crashing. I know a couple other smaller companies like private mom and pop shops that operate in the same business as they do. It's not pretty out there. It's not pretty, right? We just talked about cycles. Residential housing right now in Canada, it's depressed. Again, it's, invest in what you know. I think I answer a lot of questions about Atlas Engineered products for people like in Europe that don't understand the housing situation here in Canada. I'm Canadian. I get to look around. Recently I was in the Maritimes. I just went to BC, and I live in Western Canada, and there's nothing getting built. There's nothing good. You could talk to me about stats all you want. I'm not seeing very many homes get built. So I am not very surprised that that Atlas is struggling. The Fresh Factory BC also had a great quarter. Yes, they did. I made a video on that company. That's the Fresh Factory. It has a video on my channel, Common Sense Investing. Look up the Fresh Factory. Could be undiscovered. Share price has been stagnant for a long time. The company is improving. I like that. The only thing I think that's scaring some investors away is they do have massively high insider ownership on preferred shares. So the insiders of the company basically control it. You won't get much of a vote if you buy shares of the Fresh Factory, but good improving company. Same for Hash, long recovery, but looks like they are getting there. Yeah, again, Paul Andreola says climbing that wall of worry. That's basically what Hash is doing. Simply Solventless Concentrates, another cannabis company. They crashed like 75% on one day because they had an accounting change. People accused them of creative accounting to basically show income that wasn't there. Maybe that's rightfully so. Maybe they did that on purpose. Maybe they didn't. I don't know. But since that crash, they're double since that crash. They went down to about 15, 16 cents Canadian. They're back up to about 35 cents Canadian. They are looking to nearly double the size of their Humble Grow operations. So double the size of Humble Grow, plus reduce the cost, the dollar cost per gram of cannabis from 80 cents to 50 cents. If they can do those two things, then Hash will probably recover because share price follows earnings. And even if people are upset at the company for that accounting change, if they can improve their earnings, then it will be kind of a success. Next Leaf Solutions, great quarter. Yeah, that's oils. That's the ticker oils. It did have a very good quarter. Like cannabis, like I said, there's actually a lot of cannabis stocks. I've been going through one by one through the cannabis space. Some are better than others. None of them have really been bad. None of them have really been. One of the problems with the cannabis space, though, is they have had high share dilution, and they have had some of them have high debt. So some of them are getting really good earnings now, but their good earnings now definitely have to pay down the history of their past, their debt, some of the share dilution, buybacks, paying off some bank loans. But yeah, there's been some cannabis companies that had definitely more of a bull earnings than a bear earnings. I think I just talked about NTG Clarity. Auxly looks like the best recovery story for the cannabis sector. I do like Auxly for sure. It's very comparable. There seems to be three right now. I'm not going to name names because I am going to make videos on some of these companies pretty soon here. I've been going through the cannabis space and picking out, like I said, kind of my top 7 that I am going to buy and put in a little index. So that will be coming up, which ones I think are the absolute best. What do I make of URL, which is name silo, being down over 6% after reporting what appeared to me as decent earnings? Well, I mean, that's happened to every stock this earnings season. I mean, even Zoom, which absolutely crushed earnings. You remember when Zoom, the day of Zoom's earnings, they went from $1.59. They opened the day at $1.59. They went up to $1.85 Canadian in share price. They just reported 232% EPS growth. They went from $1.59 to $1.85, and then they crashed to $1.62. They closed the day at $1.62. They got 232% EPS growth, and they closed the day 3 pennies up. This market, this Q2 earnings season has been challenging, right? You could have the best quarter, and you're still going to struggle, especially around earnings. There's a lot of traders. There's a lot of people that are seeing one thing they don't like in earnings and panic selling. And then there's other people that are seeing one thing that they like in earnings and panic buying. That's the way I've seen 2025 play out. Definitely the Q2 earnings season. So I am not surprised that name silo is down on earnings. A lot of these companies are kind of getting a little bit ahead of their skis as people get excited, and this is going to be the outlier. This is going to be the one stock that's going to massively overperform, and you expect 50% revenue growth, and they only get 45% revenue growth, and oh, I better sell. And that, honestly, like I'm being a bit dramatic here, but this is how I've seen the Q2 earnings season, right? This is what I've seen happening, and so it's not much of a surprise to me. AMPX, wondering what you think about it. Decent position, has analysts saying it will be $13 to $15. I'm an hour into this live stream, so I'm not going to have time to break down another company for you. My apologies, but if you want to ask me down below in the comments, I could take a quick look at it. I've never heard of AMPX. $13 to $15 stock, though. My question is it a microcap? Is it a microcap stock? I prefer stocks, especially initial positions. 20 million to 200 million is basically my sweet spot. So I know some wood frame construction in Western Canada, and I'm Will Cameron. It's a cyclical. Yeah, it's very cyclical, and it's in a very, very large down cycle right now for construction in Canada, unfortunately for Atlas Engineered Products. So that's it. That's it for the questions, comments, concerns. I'm over an hour into this live stream. That's my Q2 earnings season. It's done. Next week, we got to talk about something else. Mind Technologies is reporting on September 9th. So exactly on the Monday on this, yeah, September 9th. So it'd be Tuesday. So there's not much else reporting. We're pretty much done for microcap stock earnings season. So let's get through the month. It's supposed to be a down month. That's a great month for research. That's a great month for finding your favorite stocks and buying it at a good price. But like I said, based on, first half of this year being such a struggle, I definitely have my brain and my eyes on what could potentially be the best stock for 2026, right? Where is this huge housing shortage in Canada everyone has talked about for the last 2 years? Well, we have a huge housing shortage. It's just we're not building houses. It's too expensive. People don't understand that for the people that build the houses, for the people that construct the houses, it's hard to get a loan. They gotta invest money to build those houses. You're talking about land development and infrastructure. Then there's permits, and that's the other thing. The government has destroyed home construction in Canada because it takes so long to get permits, right? So once you factor in the time, the money, the permits, the delays, getting workers in, which there's arguably a shortage of workers, but that depends on where you're trying to build the house. Some places have lots of workers, some places don't. It's very hard to get these homes built. And then once you get a home built, who can afford to buy it? I don't know. I've actually been joking around, like we're always talking about, is Canada in a recession? We're looking at GDP. I'll tell you what, personally, I've been in a recession now for 3 years probably. And not that I'm poor, but what I'm saying about a recession is I'm not making more. I'm not getting paid more in the past 3 years, but my expenses have gone up massively. I am very much like a lot of these microcaps in Q2. So, who's buying these brand new homes that are getting built? I would suggest a lot of Canadians, their salaries are kind of stuck, their expenses are going up, interest rates haven't been going down. Why build or why buy a new house? Yeah, CorMedix. I actually had a CorMedix slide here. I think I forgot about that one. Let's take a look. CorMedix is up 40% after you mentioned it. Once again, you proved to all your listeners you know your trade very well. Thank you for sharing your time with us. Yeah, you are welcome. So this is CorMedix right now. I put out a post saying that I disagree with the market right here. This was their earnings and press release that they had agreed to purchase Melinta. This is another drug company. And share price crashed from about $12.50 American. I bought shares here at $9.75, and I completely disagreed with the market. Since then, today, they announced that the acquisition has closed. As usual, the market, which I will disagree with. Again, I don't know what the market is doing on CorMedix, but it was actually down 2 to 3% at one point today. Thank you to the people after hours who seem to be more intelligent, because it's up 3% after hours. So I purchased at $9.75. It's now sitting at $15.12. That's a fantastic return. They also increase guidance. And that's why I don't know if people read these things or what. Like, why was it down today when basically they just raised their guidance? It was 305 to 335 million for guidance. Now they've raised it 325 to 350. And this company produces lots and lots and lots of cash, which I really like. So congratulations to CorMedix. And thank you for the shout out on my competence. I really appreciate it. Like I said, I am going to get some stocks wrong. We all will. But if you can get 2 or 3 or 4 winners for every one that you get wrong, you're going to do very, very well in microcaps. Thank you, everybody. I'm shutting this one down. I will see you again in a week. Talk to you then.